All right, Mr. Isaac Anyalisi, he's a securities and investment analyst. He joins us to look at the stock market now. Yeah, we have you back now. So I was going to ask you just to talk to us about what your take is now that we have the market, come back into physical trading. Now we have a physical structure. So please talk to us. What is likely to change going forward?
Well, I don't think that we expect an immediate change, maybe in terms of the volume of transactions that we have been seeing in the exchange. It's not going to lead to a lot of people coming to invest and all that. But then, within the human space, there's this psychology. There's this psychological thing about the shutdown, the physical shutdown of the exchange with respect to human activities. Before that COVID-19 lockdown, you will agree with me that some investors will naturally come to the exchange, and the fact that there is activity around the exchange, people going up and coming down, communicating to each other. I went to the exchange, to the floor of the exchange, I went to the exchange building and all that. It has a way of enhancing information. It has a way of also instilling in the minds of investors that the exchange is actually active. So that might just be what it will be, or what we expect to see. As far as the stockbrokers themselves are concerned, what would have been lost is just the interaction that goes with it. Right. The information dissemination on a timely basis. These are just the major things that will change. Is that in the area of information dissemination among the brokers, we expect to see some changes, but that doesn't really have to translate to an increase in the volume of transactions.
Okay, interesting. I mean, I was again going to look at the fact that yes, the market is back physically, but again, it's not fully recovered yet. But with this development, is that an indication that we are beginning to see a full recovery, either in the capital market or the economy?
Well, various economies of the world, some economies we are beginning to recover from the impact of the COVID-19 before we started hearing about, before the February 2014 invasion of Ukraine by Russia, which has also adversely affected economic development across the globe. Before we started hearing about tensions along the Taiwan Strait, where China is threatening to invade Taiwan, just like Russia has done. So prior to these two developments, there has been recovery, there has been vestiges of economic recovery here and there. And before we now began to see the issue of the inflation rate, which has eaten very deep into both the UK economy and the US economy. So with respect to the coming back to physical trading, maybe in a way representing a return to the path of recovery economically.
More like confidence.
It doesn't. Well, confidence in the market could actually be said to be restored by the physical interaction. At least it goes to show that the exchange has been able to overcome the unpleasantness, as it were, of the COVID-19 and its negative impact in its activities, and the exchange has come to stay.
Now, let's look at the numbers yesterday. The market, of course, was flat yesterday. It opens flat on Monday. Looking at the numbers that we have, what would you say was responsible yesterday? We didn't see that much rally. Can you hear me? Can you hear me, Isaac?
I can hear you now.
Okay, so I was asking you, looking at the market yesterday, The NGX opens the week flat. What do you say was responsible for that? Well, I think there seems to be a bit of a delay there or disruption there. If you look at the Nigerian stock markets as they open yesterday flat. But yes, thank you for joining us again. So I was asking you, what was responsible for the trading yesterday? The market opened the week flat.
Yeah, a number of factors would have been responsible for that development. If you follow the trajectory of trading activities on the exchange in the past couple of weeks, it's not been rosy. It's not been rosy at all. There have been situations where the market made a loss, started the week with a loss, and ended the week with a loss. But last week Friday, the market gained by 0.07% and was able to sustain that momentum yesterday. Even though there are some wide disparities when you look at certain pointers, like the number of deals dropping by 7.66%, you see the volume of transactions dropping by approximately 85%, and you of transaction dropping by about 53.4%. So the reasons for this is not unconnected with economic developments. We have said earlier before now that the level of liquidity in the market is very low. This is compounded by the fact that there have been drastic reductions in foreign portfolio investment into the country. It has also been exacerbated by the fact that inflation is on the increase, and with the inflation rate for October reading at 23.34%, you expect very cautious investment approach from any rational investor. And I think this is some of the issues that are playing out as it is in the market currently.
You mean inflation for September, actually, which was around more than 20%?
October.
Okay.
October inflation, food inflation at 23.34%.
Okay, so is that you're predicting? Are you predicting? Because October inflation rate is yet to be out.
No, the inflation is already out. If you check the Nigerian Bureau of Statistics report, you see food inflation at 23.34%.
Okay, all right. Thank you for breaking down news to us. Well, I think we need to leave it there. I wanted to ask you your expectation for the market for today, but if you can do just that in 30 seconds, that'll be okay. Well, I guess we just have to leave it here. Thank you so much, Mr. Isaac Kanyalese, as a securities and investment analyst. So to come after the break, the exchange rate between the Naira and the US dollar crashes further to 875 Naira, the black market Monday. This is our focus next as we take a closer look at the current value of the Naira and impact on the lifestyle and businesses. Let's stay with us in a moment.